Welcome to the Deep Dive. Today we're digging into something pretty interesting in the crypto space. This idea that, Bitcoin might actually skip the usual summer slowdown this year.
Ah, right. That old sell in May and go away saying.
Exactly. We're using a CoinDesk piece from today, buy in May and go away, as Crypto Bucks summer lull analysts say, as our guide here.
So the big question really is, does that Wall Street adage, which is mostly for stocks anyway, does it even apply to Bitcoin in 2025?
That's what we're trying to figure out. And, well, this analysis suggests maybe not. It points to a few key things.
Like what?
Like positive regulatory vibes in the U.S., more big institutions buying in,
Okay.
that upcoming Fed decision on interest rates, and even Trump's tariff deadline. Lots happening.
So the plan is to unpack all that. See why some analysts are actually feeling pretty bullish about Bitcoin this summer, maybe even thinking about record highs?
Yeah, let's do it. Okay, so first up, this sell in May thing. It's basically an old stock market idea, right? Summer's slow, maybe take your chips off the table.
That's the traditional thinking, yeah. Based on historical performance, summer months often see lower trading volumes, less activity. But now we're hearing, well, the opposite for Bitcoin.
Right. Paul Howard from Winsent, a crypto trading firm, he's quoted saying it might be more like buy in May and go away for Bitcoin.
Which is quite a turnaround from the usual advice.
Yeah, definitely. So what's his reasoning? Why buy?
He's basically looking ahead, particularly at the European summer, and he doesn't see any major, negative catalysts or heavy selling pressure lined up specifically for Bitcoin. So the thinking is maybe those usual summer doldrums won't hit crypto quite the same way this year.
Okay. Now, the article also mentions these positive regulatory developments in the U.S. That sounds important. What could that mean realistically?
Well, it doesn't spell out specific laws or anything, but, it could be a general feeling, maybe a sense that regulators are getting a clearer framework, or perhaps less hostility, more constructive dialogue. Even subtle shifts can make institutions feel more comfortable dipping their toes in or maybe diving in.
Yeah, because that ties right into the next point, this increasing institutional buying. That seems like a really concrete factor.
Oh, absolutely. And the spot Bitcoin ETFs in the U.S. are the big story there. The numbers are pretty stark.
What are we seeing?
So value data shows $667 million in net inflows just on Monday.
Wow.
And for May overall, $3.3 billion net.
That's serious money flowing in consistently, even with Bitcoin hovering just under its last peak.
Exactly. It shows sustained demand, not just a quick flash in the pan. And it's not just ETFs either.
The article mentioned companies following MicroStrategy's lead.
Right. Adding Bitcoin to their corporate treasuries, sometimes funding it with debt or stock offerings. It's becoming, for some, less of a pure speculation and more like a strategic reserve asset.
That's a fundamental shift in thinking, isn't it?
Yeah.
Treating it like, digital gold almost.
Kind of, yeah. And that long-term holding perspective can definitely support the price.
Okay, so building on that, Paul Howard again, he made a pretty bold prediction.
The all-time high one.
Yeah. He reckons Bitcoin will break its record highs pretty soon in the coming weeks. He ties it to the total crypto market cap getting closer to $4 trillion.
Which is currently sitting around, $3.3 trillion, according to TradingView?
It's something like that, yeah.
It's ambitious, but it fits the narrative, doesn't it? More institutional cash, maybe a friendlier regulatory environment that could easily push the whole market up, and Bitcoin usually leads the charge.
Sure, but okay, let's play devil's advocate. Historically, summer has been slow for crypto too, right?
It often has, yes. Lower volumes, less volatility sometimes.
So why would this summer be different? The analyst at Kaiko mentioned macro and political forces disrupting the lull. What are they referring to?
They're pointing to specific upcoming events. You've got the Fed's next interest rate decision in June.
Always a big one.
Always. And then there's that July 9th deadline Donald Trump has set for tariffs on trade partners.
Ah, okay. So external factors.
Exactly. Things outside the crypto world itself, but they could absolutely cause waves, create volatility across all markets, including Bitcoin.
So instead of a quiet summer, we might get choppiness driven by these bigger economic and political moves.
That's the potential, yeah. Uncertainty around these events could definitely shake things up, maybe preventing that typical summer stagnation we sometimes see. Investors will be watching these very closely.
The article also mentioned the Bitcoin options market. Kaiko had some insights there, too. What are options telling us?
This is pretty interesting. They noted heavy volume on options contracts with strike prices way up there, like $110,000 and $120,000.
Oh, and when do those expire?
Around June 27th, so relatively soon.
Okay, so what does that mean? High volume at high prices.
It suggests traders are placing bets, essentially. They're betting or maybe hedging for the possibility that Bitcoin makes a really significant move upwards past those levels before the end of June.
That's a strong signal of bullish expectation then. People putting actual money behind the idea of a big rally.
It certainly points that way. It's not a guarantee. Obviously, options are complex, but it shows where some market participants see the potential heading in the near term.
And the price has been flirting with those highs recently too, hasn't it?
It has. The piece notes it briefly hit $107,000 on Tuesday, gained about 1.2% over 24 hours.
And trading just, what, 2% below the January record?
Pretty much. So it's right there, knocking on the door. That proximity, combined with the institutional flows and the options activity, well, it fuels that bullish case.
Okay, so let's try and pull this all together. It really seems like that old sell in May advice might just be irrelevant for Bitcoin this year.
Seems possible, yeah. You've got this confluence, as the article said, potential regulatory easing, definite institutional buying.
Right.
These looming macro events that could inject volatility instead of calm.
It all points away from the traditional summer lull, maybe even towards a rally.
That's certainly the argument these analysts are making. They see a path not just to bucking the trend, but potentially hitting new all-time highs over the summer.
It's a good reminder that, crypto doesn't always play by the old rules. It has its own dynamics.
Absolutely. It intersects with traditional finance, but has its own ecosystem too.
So for you listening, it's worth thinking about, isn't it? How these old market sayings hold up or don't in this newer asset class. And, what other unexpected factors could come into play and influence where Bitcoin heads next.
Definitely a space to watch closely in the coming months. Could be an interesting summer.